Tata, the Indian Hotels Company Limited, IHCL, reported its 13th consecutive quarter of record performance. Consolidated net profit jumped by 19% year-on-year, YoY, to 296 crore rupees for the quarter ending 30th June 2025, up from 248 crore rupees in the corresponding quarter last year. It saw a robust 32% YoY growth in revenue to 2,102 crore rupees, compared to 1,596 crore rupees in the same period last fiscal year. EBITDA increased by 29% to 637 crore rupees. Domestic same-store hotels delivered an 11% consolidated revenue per available room (RevPAR) growth, significantly outperforming the industry. The international consolidated portfolio also reported strong occupancy, 78%, and RevPAR growth, 13%. Revenue from new business verticals, like Qmin, Amma Stays and Trails, and Tree of Life, grew by an impressive 27%. TajSATS, their air and institutional catering business, also saw a 21% growth in revenue. Motilal Oswal maintains a buy rating on Indian hotels with a target price of 950 rupees per share. This implies nearly 24% upside from current levels on the back of strong growth outlook led by healthy traction in the core business and an accelerated growth trajectory in the new and reimagined businesses. IHCL has set an ambitious goal to double its portfolio to over 700 hotels by 2030, from its current portfolio of around 390 hotels. This is part of their Accelerate 2030 strategy. Significant signings and openings. It continued the momentum by signing 12 new hotels and opening 6 during the quarter. Noteworthy signings include 5 Taj hotels, including 3 luxury wildlife lodges in Kruger National Park, South Africa, and properties under SeleQtions, Ginger, Gateway, Vivanta, and Tree of Life brands. New openings include a Taj in Aliboig, 2 SeleQtions resorts in Lakshadweep, a Gateway in Coorg, and a Ginger in Dehradun. Capital allocation. IHCL plans a capital expenditure, capex, of up to 5,000 crore rupees over the next 5 years to support this aggressive expansion. This investment will be across existing properties and identified expansion projects. Asset-light growth. Over 95% of the recent signings have been capital-light management contracts, aligning with their strategy to grow with less direct capital expenditure. Focus on India. While there's international expansion, 80 to 90% of the growth is expected to come from India, particularly in Tier I and II cities. Brand diversification. New brands segments. IHCL is evolving its brandscape by introducing new brands and formats, including branded residences. They recently launched the Claridges Collection in partnership with Claridges Hotels, aiming for 20 properties under this luxury boutique brand by 2030. Strengthening existing brands. Ginger has crossed a 100 hotel portfolio, and Vivanta has reached the 50-plus hotel mark. Taj continues its global expansion in key gateway cities. Growth in mid-scale and upscale. A significant share of new additions are driven by Tree of Life, Boutique Leisure, the reimagined Gateway brand, upscale, and Ginger, mid-scale. Brand recognition and strategic partnerships. Taj, IHCL's iconic brand, has been ranked as the world's strongest hotel brand for the 4th time, and India's strongest brand across sectors for the 5th time, by Brand Finance UK. This solidifying leadership in luxury hospitality. Strategic partnerships. The collaboration with Claridges Hotels for the Claridges Collection is a notable strategic move to enhance their luxury offerings. Future outlook. IHCL is poised to maintain double-digit revenue growth in FY 2026, driven by strong same-store performance, sustained momentum in new businesses, and approximately 30 new hotel openings. The hospitality sector in India continues to show resilience and sustained growth, with demand outpacing supply and a recovery in foreign tourist arrivals.